What's up traders, Dave FX Hunter here, and welcome to this video where I want to introduce you my latest update of the FX Hunter wealth trading tool, the version 3.0. First of all, I want to say that this is not going to be some strategy explanation or or some trading teaching webinar, but I want to show you the all trading tools which is in here. Most of you might know them because you're using this platform, but it's all a little bit tweaked up and developed into the better situations, better functionalities, and it has some more new tools which helps us really to make our trading decisions much easier. As well, guys, I want to mention this. Definitely, I don't want to put myself into the position of some trading guru, educator, or some developer of some holy grail or some strategy. This is basically the results of my 7 years experiences in the way to look into the markets in the terms of the liquidity, institutional order flow, institutional trading, right? So basically, I don't want to come to the charts like this and start to draw the levels, you know, where the liquidity could be, where the institutional levels was, where the institution's been trading. I don't want to collect the COT data into my Excel every weekend. I don't want to be looking to the my FX book retail positions where I even don't have it in the history. I don't want to do all of these things. I basically, after the 7 years, I simply want to come. I want to do one click and I want to see everything, right? So as I'm using these things for quite some time, since we've been developing it and upgrading it, I can come to the markets and in the 5 minutes I simply know if I want to trade or not. That's what I want to do. That's why I have started the trading, and not because I want to draw some stupid formations or whatever, right? So basically I want to have tool which will tells me in the minute what I can do or not. Okay, so as said, this template is created for the institutional trading. So how to start? Basically, you know, this movement or this movement did not happen because you or me bought 5 lots, 10 lots, or even 50 lots. It does not happen because that. It happened because some bigger entity was trading in the market sharply. That's why the price was ticking a lot and the volume was coming into the markets, right? So we don't move the markets. We are just the liquidity providers with their stop losses, etc. However, so as said, these movements are leaving the footprint. So basically, so from this movement, was created some institutional level which you might know from some other strategies as the order blocks or maybe the supply demand levels, right? So these levels are levels where the institutions were trading are basically great for the potential and other entries, right? It's great, and yes, you might now thinking why to have my template when I can draw these levels by myself. Of course, you can draw them, all of them, no problem. I've been doing that for quite a long time, and I will tell you that if you want to trade on the daily time frames, you can do that. You can update it, but if you want to go on to the 4 hours, 1 hour, and you want to have exact entries and you want to have more trades, you will basically fail. It's not possible to track and update all the time frames with all the levels like this and draw it. It's so much work, and if you can do that, of course, I don't want to say it's impossible, but it will cost you a lot of time for the all time frames, try it for the 7 markets. You will be exhausted by doing this. And what is most important is that basically we are still the humans and we can make mistakes, right? So we might will not see this level, right, which has created this bounce in here, or this one another second time here. So we can make mistakes. What is amazing in this is that actually our algorithmic system is spotting these levels, and it's analyzing them by the rules that there has to be some average daily entry, average daily range movement, and it has to achieve something like removing opposing levels, right, to be qualified as a correct institutional level which could have some reaction. That's why our levels works amazingly, right? So that's how I would start. This template contains institutional levels for the all time frames from the monthly, weekly, daily, 4 hours and 1 hour, right? And this is how I can turn them on and I can turn them off, right? Then I can choose which levels I want to have. For example, I want to have just 4 hours and 1 hour, and I can turn them on or off by one click, right? So that's amazing. Definitely the institutional levels. Next levels are whole numbers. So it's a blue line and the green line, right? That is the blue line is the whole level. That means 0.91. Many people knows it as some psychological levels. It's a bullshit. That's not any psychological levels. It's simply the levels where the banks are trading. Look how they traded here: half level, full level, like a whole number, half number, whole number. You see how it reacts, right? They simply don't care about the smaller levels. They go from half to 0, right? So basically, if you can simply use just these ones, that's could be good as well, but I use them in the confluence with the institutional levels, right? So if, for example, in here, as I can see, here was the institutional level and the confluence of the half number, that's good and strong for me. Next level which I want to consider is, of course, the high and lows. I can be drawing them manually, or I can be just watching the markets like this, but I want to see them visually. So a high and low, and it will bring all the high and lows. Why I got them right now? So for example, let's say I want to go long on this market. I will never open the long trade until some low is taken out. Why? Because if the markets want to go up, they need to buy, but when they buy from here, yes, it can happen because they removed one low here, or they took one low here, but most likely they will be buying after taking out some low and taking the price back into the institutional level, right? So let's look at it again. Where is the institutional level? In here. Look at this. Here is the institutional level. Here is the high and lows, right? So it looks like they still are making this illusion of the classical support and resistance, and they will be trading below it. But as said, I don't want to explain the strategy in here. I'm just saying the things. So high and lows, definitely to see where the potential stop losses will be below. So we will see if this will work or not. Then the next levels, which are very important as well, are the gaps. Basically, what is the gap? So let's bring this one in here, right? Basically, the gap is where the market was moving so sharply that the price did not retrace it. You can see. So what does it mean if the market is moving sharply like this? Again, the institutions are trading, institutions buying to make the market move sharply, right? So look, for example, in here, we had sharp move, retracement back into it, filling the rest of the orders, moving higher, again, sharp move, boom, right? Now they starting taking out, or here, worked as a resistance, right? Anyway, what's going on in here? Again, sharp move in here, and then what we can expect right now as well. Look how in confluence is it with this high and lows. We have the high and lows, and above is this sharp move. There is not the structure. So what does it mean? What does it mean that in these levels will be? Look how this puzzle can be put together. So basically you have the market structure, and below it is the potential institutional level. Liquidity zone, right, where they want to fill more orders. What is there as well? Look, you don't see it right now. Look, so what can happen in here? If the price drop lower, they will take out the lows, the stop losses of those who entered it today. I'm not trading today, it's Monday, nothing interesting in here, so I don't want to enter here in the middle of this, right? I want to trade after they take out these lows. So we have the low, we have this liquidity, we have this institutional level, right? As well, we have yes, we have this moving average which is keeping the trend, right? So that's why the gaps are so powerful as well. You need to go through it as by yourself, or I will be explaining in the next webinars. Next thing is what to say now. Yes, this is important as well, of course, the volume, right? Many people don't understand the volume at all, or they think that the volume on the Forex doesn't work because the Forex is decentralized and you cannot get the exact volume. This is a myth. Yes, Forex is decentralized. Yes, I don't know how many contracts was traded in here. I don't have exact numbers, but I don't need it. Please find the book from the Anna Koling. It's called Volume Spread Analysis, and it's about the volume, how the tick volume is good enough for you to read the market. That's why I have highlighted these volumes in here and here in these candles, because I need to know the climax and I need to know the change in the volume. I don't need to know how much contracts was traded in here. For me, is the enough information that as the price was dropping, the volume was rising in here, right? But look again, where the volume was rising? Exactly in the institutional level and below the half level, right? That's a good sign that something could happen. We actually had the trade in here on the last week in my signal service, but we closed it because it was coming into this level. We closed the level, the trade, and then the reverse, right? So it all really works nicely together, the levels with the volume, right? So next thing as well is here, what I want to show you is, and it's very important, this on the right left corner is it's SS panel, right? It doesn't look any interesting, right? We can see USD franc 1 hour chart, right? We can see what markets are open right now, so now could be some volatility. However, we can see this Monday is very quiet for now. So what important is here, this range. This range, these things tells me if I want to trade or don't want to. So what does tells me this range? We have this range daily high, we have this range daily low. So that means that we have 80 pips range in the last 5 days, right? So that means that from here it should be 80 pips. You see 79, it's 80 pips, right? Of course, if I can put it exactly on the point, right? So the market, this tells me that the market has a potential to move 80 pips from this or from here. That's the average daily range. And this second number telling me that it already moved 36 pips, right? So what I see that it has moved, let's try to measure it again. So what I see from the high to the low, you see 36 pips. Of course, it's not exactly right now, it's just saying like 34, but if I put it exactly on the point, right, 36 pips. So I know that the market, but by just quick look into this, that the market has made 36 pips from the potential 80 pips move. So there still could be sitting 50 pips for today, right? So that's good that we can trade. There is already markets today which has made its move, and it's not good to trade. So what does this tells me? So for example, what if I come to the market which will be down in here, which has made for example something like 70 pips from potential average move 80 pips, and it looks bearish. What does this tell me? It tells me that I will not be shorting today, because today's move already happened, right? So it's quite important thing. As well, we have this range weekly high and low. It's the same ideology behind this, and this is only made for the weekly, right? What I like to trade is that if some movement happened on the week and it reached this range weekly low and high, I like to trade the reversal trades. If is it, of course, in the confluence with some levels, right? So for example, if here will be some level around this this weekly, right? So for example, if the price comes down here, I don't know if that will happen. We will see that it's on the weekly low and the daily range, daily level, sorry. So that would be nice to take a trade in here, right? That means that the market move for that week is exhausted. Next tool what I want to show you is, of course, the powerful COT data, right? Those who knows me, you know, on my website and from my weekly forex forecast that I am following the COT and I'm following the data, but what I like to see is to have it all in my platform. So basically right now I simply click to this number and it tells me what exactly is the data, what is the exposure between the USD and the franc, what is the exposure between the USD and the coefficient, the change from the last week, right? And yeah, so that's basically amazing. So I can see it. I don't need to anymore. Everyone asking me, explain me the longs exposure, short exposure, but it looks bullish, it looks bearish. Well, basically look at this. The COT will not tells you the future movement. It will tells you what happened in the previous week, and we can see it was -10, -4, -10. Well, what happened? What does it mean? That means that once the market was moving up, basically the USD was weakening against the franc. So basically what the bank's been doing in here, if we can see this, they basically been building the positions on the franc. So what I would expect is the price to drop lower, right? But would I short it in here? No. What I want to see, I want to see some liquidity dip. Where is the liquidity? Look at this, above. Liquidity is above. So most likely something like this could happen, right? Anyway, I said I don't want to do any predictions or whatever, and still I'm doing it. Next thing in here is retail positions indicator. It's basically showing me the exposure, right? So what we can see in here is that 22% of the retail traders are in the long. That means that, of course, 78% is in the short, right? Where they have their average price, I think somewhere lower, right? So we can see it's here. So basically this is a gap where the market makers can trade without giving a chance to win one or other side, right? So basically we want to trade against the majority of the retail traders. So where this data came from? Well, basically all the MyFX book accounts which are connected to the MyFX book, they produce these numbers. And now you might thinking this is not the all data, this is not the complete. Well, of course it's not complete, but the thinking of the retail minded people is very same. So even we have just a small piece of this market, it's most likely saying more about the whole group of these participants of the market. So we would like to trade against the majority, which would be right now to the long side, right? So as we have a 78% traders in the shorts, what we can see in here as well is this. Look at this. We can put the history, and what we are seeing in here, we can see that there was less people in the longs, then the price started to drop. There was more people in the longs, then here was more people in the longs, now is less people in the longs when they be taken out. So right now when 78% people is in the shorts, where will be in the stop losses? Here is where the price will most likely come, right? But we know that the COT data, that the banks been closing the positions on the USD, and they been building the shorts on the Swiss franc. That's why this positive, I mean, it's a negative number but positive for the franc. So if still 78% people is in the shorts, here will be the liquidity for them to make this working, right? So this week we might see these highs taking out and then the potential drop, right? So that's basically how I use this for trying to identify what the retail is doing. Basically what is the ideal thing is that we want to see the COT negative, so the price would be dropping, and here we want to see the bigger number in the people in the longs, right? So if there is 80% people in the longs and the banks are shorting, you can be sure there will be trend like a fuck, you know. So what moves the markets, what situation is moving the markets is that when the COT is the banks are one side and the other side the retail is providing them the liquidity, right? So currently we know that the banks are preparing for the short, but the retail is shorting as well. So we need to see how these retail shorters will be actually taken out from their shorts and how they will be sucked into the longs, right? Which will be in here. Why? Because here is the stop loss is definitely here and here, right? And what's going to happen when the price comes in here? The traders will be thinking that they will trade the breakout. Okay, that's my thinking, right? So, and I have these tools which tells me exactly what's going on in here. I don't need to have any RSI indicator or these bullshits. I have the real data from the market, right? So based on that I can trade, right? Okay, so next thing is here, this is the weekly open. This is the weekly open price, and we have the highlighted the Thursdays, right? Why Thursdays? Because on the Thursday there is a there could be the reversal or there could be very sharp move, right? So now I will show you how this price is actually, why is it important for me. So what we can see, for example, in here, this is not on this market we cannot see it too much as on the others. For example, I can show you on the Euro USD, right? But look, so what we have in here, right? So for example, let's start here on the top so we can see the break. Here is the weekly open, right? We can see the break, then the retest of this weekly open, boom, price drop down, right? Then we have a move up. Here is the retest of this weekly open, price move up, right? Break, retest, price goes down, right? Then price goes down, nothing here, nothing here. Here is the break, you know, the retest. So here, of course, you could trade if you see the volume, right? Here the price came here down, right? Boom. Yes, so of course it's not the holy grail. However, as you can see, this price, weekly open, retest, boom, right? Here, false break, retest down, right? On the Thursday, you see the Thursday highlighted, right? The sharpest move on the Thursday. Here again, break, retest, boom, price move up, right? So definitely having a weekly open is a nice way to trade, right? So yeah, here is the weekly open for this week, price trading below it, etc. Blah blah blah. So right now I want to show you this. I like to watch the markets as said. I like to watch the daily candles, right? So but I don't like to go to the daily time frame, right, and then click back into the 1 hour time frame. I like to see exactly what is happening in this daily. So that's for we have developed this. I will now push the number 4 on my keyboard and look what's gonna happen. Right, so this is basically the daily candles, and I can see how exactly was market behaving in the each day, but I can see where was the volume, what was happening in here exactly, right? So it's a beautiful tool to just bring the quick look of this daily candles and how they are developing but we can see inside with the lower time frame. That's a perfect thing, I think. Right? Here's of course the weekly levels where the market reacted on the euro, and I'm thinking the price is going down again. And the next tool is actually next thing, which is quite important as well for me, is this. We have this. So what does it tells me? This is basically the sessions, right? So what I see in here, I will go the lower time frame, I will go the 30 minutes, and what we will see in here is this sessions. I can do it on the 1 hour. This I will push number 5 right now, and we will see the sessions, right? So what is this? This is the weekly this blue one, as said, this is a weekly open, right? And this is a sessions open price, right? So what we have seen today is basically that the price has opened here on the London, and then the price been moving in here, that it touched it, and it's going down, right? So where we are going, of course, to some nice level, which will be in here. There probably, I think, will be some liquidity as well. Yes, it is here, and here is the high and lows, right? So there is a big probability that the price will fill all this dip, right? That's how to think about this market. So yes, as well, here is a calendar which is currently somehow failed to download the file. It will be fixed soon. Yes, and now finally look at this. So this forex management tool, the trading tool, basically if I want to trade, you know what we have to do normally is to open a new trade, you know, place the order and the things. So what I do, I basically click B as a buy, and it will place me this trade projection, right? So what I can do, I can activate the trade, and once this well, okay, I need to put on once this level will be touched, the trade will be activated, right? What's this advantage to have it like this? Simply, currently, if this icon looks like this, my trade will be activated. But if I have a couple trades and I want to deactivate it, I simply click off and they will be turned off, right? Then I can adjust the trade, you know, I can move it, I can adjust my entry, I can adjust my stop loss perfectly. Now it's quick. This actually in the past was quite slow, but we have improved this drag and drop technology in the MT4, and so it now looks good, right? So perfect. This is when I want to buy. If I want to go sell, I simply click S, right, and it will bring this trade in here, right? What is as well cool is that I can of course have them both, and what I like a lot is that if I want to trade, for example, the channel, I can trade the channel as well. Look, I click B, I will bring this, and look at this, right? I can turn on the color and I can move it in here, so I have the channel like this. Let me do it. So right, so I can have the channel defined by these two top levels, and here is the bottoms, I mean this channel right here, and here would be the bottom of the channel. And for example, I want to enter in here, so I simply activate the trade, and once it hit this level, the trade will be activated with stop loss here, take profit here, and as well it's of course move automatically the stop loss to the break even, and I can set it where I want to. So for example, on the 0.8% to the target, on the 80% to the target, it will move stop loss to the break even. It close the half of the positions and all what I want, right? Simply then if I want to delete this, I click D as del, right? The next thing is this trading it's actually very cool, this trading plan shortcut. So basically I have a B, like a buy in here, right? Then I bring the another channel, another currency, and I want to go buy in here. Look what is happening in here, right? So everywhere where I plan some trade. It stores it as my shortcut, right? So for example, here I'll go B as a buy, and now you can see it's stored in here as well. Now I go NZUSD, let's say I want to go buy as well, right? So everything where I have my trading plan or intention to do something is stored in here, right? So simply then I can go through this trading plan shortcuts, right? And they will be here. Now what I can do with the one click, I can activate all the trades or I can deactivate them. That's quite cool, right? Then if I want to delete them all, I simply delete them, right? Not as in the old way in the platform where I have to cancel all trades and then bring them again, right? So basically this is all amazing, right? Now the last thing, my friends, I don't want to look like a person who's doing this to create the money, but I will tell you one thing. I have spent more than $6,000 with developing all this tool, and it cost me every month some money because we have a server which has to be running where all these levels and all these database for all these calculations are running, and it cost me every month some money. So I have decided that this will not be free anymore because as more people is using it, it's slowing and it's really hard for the server to work smoothly. So I will probably need to invest more in some proper server to make this running, right? So if of course someone wants to use it, I will be glad that they will be use it, but said it's not gonna be free. It will be, let's say, for the $49 monthly as my signals, and I will be definitely working on some more development in the future. So yeah, of course, I don't want to sell something like which you cannot test, so you can test it with the there will be probably some 14-day trial or something like that, so everyone can test it and find it useful or not. And then in future I'm planning to do some webinars or maybe some I will share some strategies or trading tactics for this template. Okay.